We're gonna analyze Netflix, and we're gonna do it all in 90 seconds. You can thank Martinator AH for prompting me to move Netflix up in my queue. He is a loyal subscriber, a member of my private group of insiders, and hails all the way from Peru. Hola, Ivy. I'll get to your request for Micron very soon as well. And if you have a request, be sure to subscribe, click the bell, and then let me know in the comments. We'll get to it. But let's not waste any time. Netflix in 90 seconds or less, that's what you're here for. Fair warning, I'm obviously going to go fast. Let's put up a clock and let's do this. Netflix is a massive internet television network. As of this taping, it has a market capitalization of around $159 billion with a price per share around $370. For existing shareholders, this represents an over 6,000% over the last 10 years. Are you too late to buy shares? That's the question. Here are a couple reasons you might want to consider owning Netflix. Netflix has been increasing subscribership like crazy. As of the beginning of this year, they had approximately 117 million members in 190 countries, which is insane when you consider the fact that there are only around 195 countries, depending on who you ask, in the world. A fact I know because my son is super into geography. They've proven the hard part, that they can actually get into these countries. Now they just have to increase their penetration within each. Management, which includes CEO founder Reed Hastings, has proven itself beyond savvy. My favorite example of this is their willingness to disrupt themselves, like they did in 2007 when they shifted their focus to streaming, even though their income from the DVD by mail service had more than doubled the prior year. But here are a few analytical reasons to not own Netflix. Their PE is an outrageous 236 versus its industry at 40 and the market at 19. PB ratio is almost 40 versus the industry's 3 and the market's 2. Recently, the company's been increasing its debt quite a bit as they continue to invest in creating their own high quality content. But clearly investors are pricing in significant growth into its current share price, as a simple discounted cash flow model of its future projected earnings suggests it's quite a bit overvalued today. Many investors perceive the amount of money Netflix is pouring into its content as a good long-term investment. It appears to have a promising future, and it has a good track record of staving off any real threats to its market share. But there is already a lot of growth priced into the stock. Should the stock market crash, Netflix shareholders should not be surprised if they experience a drop much more dramatic than the market itself. So what do you say? Buy or no? Does Netflix's subscribership growth justify such a high valuation today? I look forward to continuing this discussion in the comments. And if you found this helpful and would like to see more, don't forget to like and subscribe and click the bell so that you can keep up with all the companies we cover as we continue to help you build your rapidly growing, highly diversified net worth. I'll see you in the next one. Take care.